I've always maintained leader without a team cannot deliver. Indian industry wants to grow in a fair manner. We don't want to be competed against unfairly.
I'm all for equality of opportunity. But I believe in that philosopher who said the biggest inequality of all is trying to make unequals into equal.
Good morning. Welcome to Bazaar Morning Call from the CNBC-TV18 eBix Cash studio. I'm Sonia Shenoy and joining me is Nigel D'Souza. It's a somber moment for all of us. As you know, a fearless, bold, visionary leader has now moved on, Rahul Bajaj. Of course, all of us know him and have watched him for decades now. Totally unapologetic about his views, a visionary, to put it mildly. He had mentioned Buland Bharat ki Buland Tasveer Hamara Bajaj, right? So that, I mean, clearly someone who was known to speak his mind, never compromised on quality, and well, he moves on.
Well, that's right. Lost to the nation, iconic figure here in the country.
Absolutely.
And, personally as well, Sonia, I come from the generation where to have a Bajaj scooter was a matter of pride. I remember the day my father bought that bike. It was a matter of pride for our household. Schools, you go for functions, you go for weddings on that Bajaj scooter. So memory is etched in my mind. And I remember on the day as well, not on the day that the bike came home, on the day it left as well, we had tears in our eyes and it ran its course the entire 15 years. So matter of pride, the Bajaj scooter was part of most households. And before four-wheelers became very, very popular, to have a Bajaj scooter in your home was a matter of pride. And my home was one such home.
Absolutely. And there were tears in all of our eyes when he left as well, right?
Yeah.
So a great leader and a visionary and someone who's going to be remembered, I guess, for decades. Someone who's very, very important in the auto industry. Someone who spoke his mind, was fearless. And you rarely find such leaders these days, right?
True that.
Especially in India Inc.
True that, absolutely. Always on the front foot, and just a few years ago as well, quite a few of statements do stand out. So
absolutely. All right, well, we kickstart a brand new week and lots to talk about this week. I think the big global headline this week is the rising crude prices. Brent is almost at $96 a barrel, which is the highest level that we've seen since 2014. Now, there are, of course, escalating tensions across Russia and Ukraine that all of us know about, and that is putting pressure across the world. So it's kind of like a perfect global storm where you have higher inflation, the Fed perhaps rising interest rates sooner than expected, and now you have these Russia-Ukraine tensions as well. The Nifty was down about 1% last week. So in any case, the market has been under pressure. A lot of blue chips lost ground last week, so it'll be interesting to see what happens today. Of course, the SGX Nifty is indicating a steep fall at the start. But, there was an across-the-board basket selling. TCS, HDFC, L&T were all down about 2 to 4% last week. The Dow was under a lot of pressure as well. So 500 points gone on Friday. It's going to be a disappointing start to trade. No two ways about that. But let's see. For now, even Asian markets are seeing a big blow. So markets like Russia, not just Russia, but markets like Hong Kong, Taiwan, etc., all down about 300 to 400 points. But Nigel, lots to talk about. There are a lot of domestic cues as well. But how are the technicals stacked up? Well,
the FIs, they were net sellers, actually. We got a bit of a buy number. But if you, stripped off a couple of large trades, that's the TVS Motor block as well as the PB Fintech block. In fact, they would be sellers out there because you're assuming some part of the buying on both these two blocks was by FIs. So stripped of that, they were sellers. What did they do in the F&O market? Well, they added some shorts and they unwound some longs. Net, the long short positioning is still 48% to around 52%. So they're a bit net short on the index. But remember, we started off last week, the short positions were in that vicinity of around 65 to around 70%. So majority of that short covering has played out. Now we'll need them to sell less in the cash market for us to move higher. What about the index option space? Well, they bought close to around 1 lakh put options. That's put contracts in the ratio of close to around 2 puts for 1 call. That's not too worrying because that's some cushion on the downside. If it does take place, that's more or less protection buying. But they're writing options and they wrote call options rather aggressively. So close to around 76,000 contracts is what they wrote. So now put all these data points together in terms of levels. What are you looking at? Well, last week's low was at around 17,050. We bounced from there. I think that was on Monday. So that becomes, first level of support. If that's breached, then we move down to around the 200 DMA. For starters, I think we're going to be starting off closer to around the 17,100 odd mark. But on the upside, it's going to be sell on rise till we take out those, that congestion zone between 17,500 to around 17,600. That's going to be the congestion zone, and all those levels up for you on the screen. The SGX Nifty as well suggesting a big downtake. But Sonia, what else are you tracking?
Oh, absolutely. Looks like the bulls are going to have Monday blues today, right?
At least a kickstart rate.
At least at the start. Let's see how it goes from there. A couple of things to watch out for on the domestic front. The LIC DRHP has been filed, so that's going to expected to go through very soon. That's a big cue to watch. Because of the way Brent has been moving, the expectation is that it could have a negative impact on many of these companies, paint companies, tire stocks, aviation companies, oil and gas. So we'll keep our eye out on that. And the results season is finally behind us now. We're at the fag end. We've had weak results from a lot of companies that came in post-market hours on Friday, so we'll track them very closely. Ashok Leyland, Glenmark Pharma, Metropolis Health all reported weak numbers this time around. So without wasting any time, let's kickstart the show and tell you what you'll get to see in the next 2.5 hours. On the equities front, first up, we have comments coming in from Chetan Seth of Nomura, who says that volatility will likely remain elevated in the near term. The markets will remain focused on the Fed's policy path as speculation about the Fed likely delivering an intermeeting rate hike and the early ending of quantitative easing have arisen more recently, even though some Fed members have downplayed that scenario. Nomura economists do not expect an intermeeting hike in their base case, but do not rule out that scenario completely. Rising geopolitical risks and expectations of a more aggressive Fed tightening cycle means stocks, particularly high valuation growth stocks, are not yet out of the woods. All right, well, let's also get you some money market views because the rupee has been weakening versus the dollar. And for today, here's what you can expect. B. Prasanna of ICICI Bank says a dovish MPC outcome in India and high inflation prints in developed markets is increasing the monetary policy divergence, leading to dollar strength. This, along with domestic twin deficit problems, creates a medium-term negative outlook for the rupee. Impending near-term IPO flows and a healthy central bank reserve will support the rupee from extreme volatility. He expects trade in the range of 75 to 76 in the near term. And on the bond markets, B. Prasanna says monetary policy divergence widened further during the week, with MPC's dovish action and outlook based on RBI's benign inflation trajectory, which is expected to reach close to 4%. Nurturing growth continues to remain the prime objective with a focus on managing liquidity. Bond market rallied and swap levels crashed, effectively unwinding the excessive pricing of rate hikes and normalization. For the week, he expects the market to trade with a positive bias of 6.6 to 6.80%. All right, well, that's what you can expect from the money markets. But the overarching theme globally is the massive spike that we saw in Brent crude prices. And that has resulted in markets across the world under pressure because of the Russia-Ukraine tensions. In fact, Nigel has more on that. Nigel.